What if you could think ahead of the rest? With artificial intelligence that's always learning and adapting. What if you could stay ahead of the game and even take things to the next level? What if you could be ahead for a future that gives you more time for your loved ones and family? Freedom to nurture your health while growing your wealth is now in your reach. Through utilizing an intelligent robo-advisor that works around the clock to achieve your goals. It all begins when you think ahead. Be ahead with KDI.
Hello, everybody. Welcome to this webinar brought to you by Kenanga Investment Bank in collaboration with Bursa Malaysia I. So today we are very excited to be talking about this topic, which is hunting for gems among Sharia compliant stocks on Bursa Malaysia. So we all know that now the stock market is very volatile. So in this volatility period, there are also some gems among all these Sharia compliant stocks. Today, our speaker will share with you the market outlook and as well as what are some of the gems among all these Sharia compliant companies. All right. So my name is Shen Chu. I'm the moderator for this webinar. So without further ado, let me get started. Now, as usual, disclaimer. So whatever we share on this webinar is only for educational purpose. So in no way that will give you any recommendation to buy and sell any stocks. So should you do any investment decisions, you're 100% responsible for all your investment risks. Is that okay? All right. So may I briefly introduce our speaker today, and he is none other than Mr. Goh Yin Fu. Now, Mr. Goh joined Kenanga Investment Bank as a senior analyst in 2019, bringing with him more than 20 years of working experience in the investment industry. Prior to this, he was involved in various roles in the areas of stock market research, fund management, and private equity. Yin Fu graduated with a Bachelor of Business degree from Nanyang Technological University, Singapore, and is also a charter holder of the Chartered Financial Analyst, CFA, and Chartered Market Technicians Professional Designations. So, hello, Mr. Goh.
Hello, hi.
I think I'll address you as Yin Fu, right?
Yep.
All right,
hello.
Cool. So, how are you today?
Good, good.
So, we're honored to have you here in our CanTrade webinar. So,
My
without
pleasure.
further ado, let me hand over the session to you.
Let me just upload my slide. Many thanks for the introduction, Shane. Good evening to all, and welcome to this Sharia Team Investment Webinar, jointly organized by Bursa Malaysia and Kenanga Investment Bank. Special thanks to Bursa Malaysia for having the initiative to reach out and promote Sharia-based investing in the Malaysian stock market for retail investors. It's good to see a fairly good response here. As I understand, more than 500 people have registered for this event. And also, given what has happened in the stock market this week, I take it as that most of us here tonight still see hopes in our stock market, which is a good thing. What I intend to do over the next hour or so is to firstly paint a backdrop on what's happening out there in the investment space. Secondly, map out what to expect in terms of investment themes and risk factors. And thirdly, pinpoint where are the potential investment opportunities from a Sharia perspective. Here is what I intend to cover in this talk. Very quickly, I will take a look at the economy, where we are today, and what is the outlook. And then I will jump into the Sharia stocks performance on Bursa Malaysia. How did they perform over the past 2 years and on a year-to-date basis? And from there, I will touch a bit about the foreign fund flows. I'm sure most of us would have read that the foreign funds have actually come back to Malaysia. And let's talk about how sustainable this is going to be. And I think it's also equally important to keep an eye on what's happening out there on the global investment environment. And from there, we will dive into how does all that relate to the investment landscape in Malaysia. Also, we need to be aware what are the risk factors to be mindful of. And last but not least, we will conclude by talking about what are the interesting investment themes and our top Sharia stock picks. Let's begin by analyzing the macroeconomic backdrop. As a starting point, this big picture essentially sets the stage on what to expect going forward. If you take a look at the table on the left-hand side, okay, let's start with the real GDP. As we all know, 2020 was a bad year. We were hit by the pandemic and we were in a recession. The economy contracted by a negative 5.6%. It rebounded, although not throughout the entire year. In 2021, we were up by 3.1%. And for this year, amidst what's happening out there in the world today, our economics team has just revised the real GDP for Malaysia to 5 to 5.5% for 2022. Okay, so that essentially is the backdrop of what the Malaysian economy is heading to. I think if you look at the right-hand side of the slide, I think it's also interesting to know that even though 2021 we saw a 3.9% GDP growth, what is interesting if you look at on a quarterly basis, the momentum has actually picked up. Okay, for last year, in the first quarter of 2021, we were down by 0.5%, and we rebounded by 16.1% in second quarter, down again by 4.5% in the third quarter, and we ended up the year pretty strongly by registering a GDP growth of 3.6% in the fourth quarter. And if you dive deeper into the monthly performance of the GDP, as you can actually see, okay, in September it was minus 1.1%, but after that it was positive all the way. October up 2.7, November up 5.4, and December 2.6. So the key takeaway from the right-hand side chart is that the broad Malaysian economy is firmly on a recovery path at this moment. Okay, next would be CPI. Okay, CPI, last year it was up by 2.5%. And this year we are expecting the inflation to be up by 2.4%, relatively moderate compared to what's happening elsewhere in the world. And we're going to discuss a bit more in detail why is this the case that in Malaysia, the inflation rate is relatively lower. What about the interest rate outlook? In Malaysia, we measure the interest rate policy by looking at the OPR, which stands for overnight policy rate. Our economics team is expecting that the OPR will be increasing, but likely to be towards the second half of this year, up from 1.75% currently to 2.25%. Ringgit versus the USD, again, we are expecting the ringgit to end the year at 4.1. Currently, it's hovering between 4.17 to 4.19. And again, a bit like the interest rate, the rising ringgit strength is likely to come towards the end of the year. While we are discussing the individual items on the table on the left-hand side, do bear in mind that most of the parameters, economic variables presented here, in a way, they are all interlinked. For example, the ringgit is expected to appreciate towards the end of the year, and that's partly attributable to our expectation that Bank Negara is going to increase the OPR from 1.75% to 2.25% towards the end of the year. And the hottest commodity at this moment, which is oil, we are expecting it to average $90 per barrel for this year. We are talking about an average here. Where we are today is hovering, the Brent crude oil is hovering around 120 to 130 US dollar per barrel. What this basically means is that by assuming that we are going to see an average of 90 US dollar per barrel, everyone in the industry, in the market, is actually expecting that the current high crude oil prices are not sustainable. Another hot commodity that has been hitting the news lately is the CPO price. Last year, the average was 4,400 ringgit per metric ton. And this year, we are expecting it to average around 4,000 to 4,500 ringgit per metric ton. Although, admittedly, I think the bias is on the upside for revision, given the fact that CPO price is currently hovering somewhere around 7,000 to 8,000 ringgit per metric ton. Key thing to note also is that one of the main driver of the Malaysian economy is the export momentum. And last year, the Malaysian economy saw an export year-on-year growth of 26%. This year, we are expecting it to go up by 6.9%. And likewise, the import, after going up by 23% last year, we are expecting it to go up by slightly less than 10% this year. What this basically means is that we are expecting to see continued trade surplus, which is a healthy economic indicator for the economy, and that essentially will also help to support our currency strength going forward. Next, let's take a look at the Sharia stocks performance on Bursa Malaysia. Now, on Bursa Malaysia, currently, there are 4 indices that are tracking Sharia stocks performance. And the one that is, I'm sure most of us are very familiar with the FBM KLCI, which is actually the benchmark index tracking the Malaysian stock market. Now, the equivalent of the FBM KLCI in the Sharia space is the FBM Hijrah Sharia Index. This index essentially comprises the 30 largest companies in the FBM Emas Index that meets and pass the Sharia screening process. So if we want to compare apple with apple, when we want to see how the Sharia stocks have been performing on Bursa Malaysia against the KLCI, we have actually looked at the FBM Hijrah Sharia Index performance versus the KLCI. The chart on the left-hand side is the 2020 performance. Now, in 2020, the FBM Hijrah Index actually outperformed the KLCI. FBM Hijrah Index was up 8.5% in 2020 versus KLCI's positive performance of only 2.4%. Now, where does this outperformance come from? If you look at the chart on the left-hand side, this basically shows the top 5 KLCI leaders and laggards in 2020 and compare it with the chart on the right-hand side, which is the top 5 Hijrah Sharia leaders and laggards in 2020. If you look at the winners, similar names appear like Top Glove, Hatta Lega, and Telecom. But I think what actually has led to the outperformance of the FBM Hijrah Sharia Index is that 4 out of the 5 top performers are actually glove stocks, whereas in the FBM KLCI, only 2 out of the 5 leaders. And in addition to that, the KLCI performance was also dragged down by some of the tourism related stocks. I will recall that in 2020, the entire stock market was badly hit by the COVID-19 pandemic, and that actually dragged down stocks like Malaysian Airport, Genting, and CIMB. And these 3 names are not in the FBM Hijrah Sharia Index. So in conclusion, the outperformance in the Hijrah Sharia Index in 2020 was attributable to the performance from the glove stocks, as well as the absence of some of the tourism-related stocks. The reverse actually happened in 2021. If let's take a look at the chart on the right-hand side, the Hijrah Index actually was down by 10.5%, whereas the CI was down by 3.7%. Again, if you take a look at the performance attribution analysis, the chart on the left shows the leaders and laggards of the FBM KLCI, and you can actually compare that with the chart on the right-hand side. What you can actually see is that the laggards were pretty much the same, but the leaders, so-called the market movers, in the case of the FBM KLCI, it has some bank names. We actually did fairly well last year, and that actually contributed to the outperformance of the FBM KLCI versus the Hijrah Index, despite the fact that both indices ended in the red during the year. Let's now take a look at the performance on a year-to-date basis. This is from the 1st of January this year until 8th of March, which is the closing price based on 2 days ago. And if you just take a look at the top right-hand side of the slide, all the way up to before this week, both indices were doing pretty well. But after this week, the first 2 days of this week have actually led the FBM KLCI down by 1.3% on a year-to-date basis, versus the Hijrah Sharia, which is down by minus 2.9%. And the underperformance of the Sharia stocks actually came about because, again, if you compare the 2 charts on the left-hand side and the right-hand side, you can actually see that in the case of the KLCI, the performance was driven by Maybank. Maybank was up 6% on a year-to-date basis, and also the fact that some of the other stocks, like most of the other names, are actually quite similar. So you can actually see that the outperformance actually was contributed by Maybank on a year-to-date basis. What's interesting to highlight here is that despite the fact that what we have shown over the past 2 or 3 slides is the FBM Hijrah Index have either outperformed or underperformed slightly the FBM KLCI. But if we look deeper into the Sharia space on Bursa Malaysia, I think the exciting part would be the Sharia mid and small cap names offer a much better value versus the big caps. This has been the case in 2020, as you can see on the chart on the left-hand side. Hijrah Sharia Index was up by 8.5%, but the mid cap was up by 15.4%, which is double of the Hijrah Index. And in addition to that, the small caps was up by 31% during the year. And the performance actually persisted in 2021 last year. Last year, we saw the Hijrah Index was down by 11%, but Sharia mid cap was up by 0.5%, and Sharia small cap was down by minus 0.9%. Again, another outperformance by the Sharia mid caps versus small caps. What about the year-to-date performance? As of March, if you look at the chart on the top right-hand corner, before this fake, both Sharia mid caps and Sharia small caps actually were outperforming the Hijab index. But after the sell down, as we know, mid and small cap stocks tend to overshoot versus the big caps on either extreme. And that actually, the sell down actually contributed to the underperformance, at least on a temporary basis, by the Sharia mid caps as well as the Sharia small caps. But again, the point is that we continue to see interesting names, interesting values emerging in the space of the Sharia mid and small caps, which we are going to discuss some names towards the end of this talk. Let's now slice the performance analysis from another angle, look at it on a sectorial basis. The table here basically shows, if you take at the left-hand side versus the right-hand side, it's clearly shown that the winners, the early winners, at least on a year-to-date basis, up till last Tuesday, were the plantation and energy sectors. For obvious reasons, they were all riding on the back of the elevated CPO price as well as the rising crude oil price. Whereas on the other hand, technology and healthcare have been the underperformers on a year-to-date basis. Foreign fund flows, this chart is pretty interesting because if we start to look at it, the chart on the left-hand side, it looks pretty doom and gloom because foreign funds have only shown to be positive over the past 7 years in 1 year. That was in 2017 when Bursa Malaysia saw a net foreign inflows of 10.8 billion ringgit. The rest of the 6 years, it was negative all the way. The worst was in 2020 for obvious reason because of the pandemic-related sell down. We saw a net foreign outflow of 25 billion ringgit. And last year, it was down by 3.1 billion ringgit. Now, what is interesting here is if we look at the chart on the right-hand side, right? The chart on the right-hand side basically shows that the weekly foreign fund flows pattern on Bursa Malaysia for the past 1 year. And if we were to take a deeper look into what happened in 2021, despite recording a negative outflow of minus 3.1 billion ringgit, towards the second half of the year, especially in the middle of last year, as well as towards the end of last year, you can actually see the positive foreign fund inflows into Bursa Malaysia during that period. So that's positive because it basically means that foreign funds have started to come in sometime in the second half of last year, and that trend actually have continued to going into the first 2 months of this year. In January, we saw net monthly inflows of 332 million, and February it went up to 2.8 billion ringgit. So it's a positive sign as far as the foreign fund flows is concerned. Okay. The next slide essentially tried to capture what is actually happening in the investment world on the global stage at this point in time. Firstly, the global economy is actually seen to be on a recovery path, even though it's a bit patchy, a bit uneven, but by and large, the worldwide economy is expected to show a positive number this year. And the second point to take note of is that central bankers around the world, they have intention to unwind their QE programs gradually. What this basically means is that if you recall what happened in 2020 and 2021, to get ourselves out from the COVID-19 pandemic crisis, central bankers have been implementing the QE programs. Basically, what they have been doing is injecting money, injecting liquidity into the system by buying bonds. And what they intend to do going forward on a gradual basis is to taper, is to slow down the purchase program of the bonds. The third point to take note of in today's investment world is that obviously everybody is talking about rising inflationary pressures, and where this is coming from is that firstly is the soaring commodity prices. We all know how crude oil price has actually jumped recently. Edible oil as well. Edible oils, we are referring to CPO, soybean, sunflower, and metal prices have actually gone up as well. So much so that some metals, such as nickel, the jump was too crazy until it has forced the stock exchange to suspend trading in that particular commodity this week. Other than the soaring commodity prices, the other thing to take note of is that the inflationary pressures are actually coming from supply chain bottlenecks. For example, in the technology space, there are a shortage of certain chips, and that basically cause the supply chain bottlenecks. As well as the third point is that if you are an exporter or importer, you have to face with increased transportation and freight costs at this point in time, which again have also skyrocketed. All this in combination have actually caused the inflationary pressures to go up this year. I think I mentioned earlier in the session that each and every of these economic variables, in a way, they are all interlinked. And because of the high inflation outlook and the tightening monetary policies that I've just mentioned a moment ago, interest rates are expected to go up as well. And this is something that will be happening. In the case of the US, what we are expecting is that the US Federal Reserve will be meeting next week, and expectation is that they will be hiking up the federal fund rate by 0.25%, where as we speak today, the market is expecting the US Fed to increase the Fed rate somewhere between 5 to 7 times this year. So if you take 5 to 7 times multiplied by each time 0.25%, we are talking about an increase of the Fed rate by 1.25 to 1.75% this year. That's quite sizable. And because of these interest rate hikes, which some countries are going up faster than the other countries, potentially speaking, we may actually see financial market disruptions. And this basically because money will actually flow to countries where interest rates are relatively higher, because investors obviously will want to park their money in currencies or in countries where it offers a higher return. And because of that, the expectation is that countries like Malaysia, which is categorized as an emerging market, may actually see some fund outflows back to the developed markets like US. Okay, and the other thing to take note of is obviously the COVID-19 threat. Currently is manageable, but never say never. In the event that there are some new variants, it may still come up to derail the economic recovery momentum. Okay, and the last point here, which is also essentially the elephant in the room today, is the Ukraine war, the invasion by Russia, that has led to heightened geopolitical tensions. Okay, what I hope to discuss over the next 3-4 slides is the stock market reaction to past war events. Now, I am not a military expert. I'm just trying to look at the stock market reactions from a stock market perspective what has happened previously. Although we need to bear in mind one important caveat, no two wars are exactly the same. If we flash back all the way back to 1990, during the Gulf War, when Iraq suddenly invaded Kuwait, that was between 2nd August 1990 to 28 February 1991. In terms of analyzing the stock market reactions, we look at two indices. One is the S&P 500 on Wall Street. The other is the KLCI on Bursa Malaysia. During the Gulf War, during this period, S&P from the very beginning to the end, it was actually up 3.2% in a space of 210 days. As you can see on the chart, it's actually a V-shaped pattern where the index plunged initially before recovering thereafter. And the maximum drawdown here is basically defined as how much the index has dropped at its lowest point. In this case, S&P 500, the maximum drawdown was negative 17%, which was hit in 70 days. Back home, the KLCI during the Gulf War, from the start to end, it was down by 11%. Although there was a V-shaped recovery, but during that period, the KLCI did not manage to recover all the initial losses. And the maximum drawdown for the KLCI was 27%, and that was hit in a space of 57 days. Next was the Iraq War. If you recall, Iraq War happened after the 9/11 event that was back in 2001. And US on its own military intelligence suspected that Saddam Hussein had a weapon of mass destruction. And because of that, they used that as a reason or as an excuse to invade Iraq. That happened sometime in March 2003 to April 2003. What happened to the S&P during this event? You can see it was a pretty fast event. From start to end, the S&P was only down by 0.9%, less than 1% in 20 days. And maximum drawdown was only 3.5% over 11 days. Back home, during the same period, from start to end, the KLCI was actually up by 1%. And the maximum drawdown was very shallow, just 0.3% over 12 days. The third event that we actually look at in terms of trying to see what has been the past stock market reactions to war event was the annexation of Crimea by Russia. This happened in February 2014 to March 2014. Again, it was a very brief period, just over 25 days. S&P 500 was actually up 1.6% during this period, with a maximum drawdown of just 0.2%. And back home, in the case of KLCI, start to end, the CI was actually down by 0.8%, and the maximum drawdown was actually 1.5% over a space of 25 days. Okay, coming back to this slide, I started by saying that no two wars are exactly the same. So that's something that we need to bear in mind, simply because each individual war would have its own dynamics. They all go to war for different reasons, and different factors are at play. But just as a very general guide, what we can actually see is that most of the past stock market corrections triggered by war breakouts have been generally very shallow. Okay, 2 out of the 3 events that we just discussed, the Iraq War and the annexation of Crimea, were over in less than a month. But of course, the Gulf War, which happened in 1990, was longer and deeper. But what we can actually conclude from the past war event is that when there's a war breakout, obviously there will be an initial knee-jerk sell-off, but thereafter stock markets tend to bounce back eventually. I think all said and done, the key point that we need to take note is that from at least from the stock market perspective, we can conclude that the worst from the war event would be over only if and when it appears clear that the conflicts are not expected to spread and prolong. Where does that bring us to today's Ukraine war? If you recall, Russia started to invade Ukraine on 24th of February. And since then, there was an initial knee-jerk sell-off in the KLCI. Subsequently, it recovered a bit, but the big sell-off actually came on the first 2 days of this week. So, so far, the maximum drawdown, so far, it has been about 2.8% in the case of the FBM KLCI. And that basically, in a way, if you look at the past 3 war events, other than the Gulf War, the other 2 events, which was the Iraq War, maximum drawdown of 0.3%, and the annexation of the Crimea, maximum drawdown of 1.5%, we are actually more or less there. Okay, but in terms of the time frame, we are less than a month since Russia started to invade Ukraine. So it is very likely that in terms of time frame, we will likely to drag on for a little while more. Okay, but in terms of maximum drawdown, again, it all depends on whether are there any signs that the worst is over, and the signs to look out for is whether the conflicts are expected to spread and prolong or not. At this point in time, things are not very clear. There are still many moving parts. On one hand, they are trying to talk to have a ceasefire, but on the other hand, I think the attacks are continuing. Okay, coming back to Malaysia, at the end of the day, when we talk about stock market investment, it all boils down to, when we talk about fundamentals, it all boils down to corporate earnings. Like it or not, for a share price to go up on a sustainable basis, the companies must continue to deliver earnings, quality earnings growth. And what we can actually share is that it was good to see in the latest quarterly reporting season that was just ended end of February, the corporate Malaysia earnings are actually showing a strengthening trend, obviously recovering from the COVID-19 pandemic effects. This basically refers to the October to December 2021 quarter, in which case of the 129 stocks under our coverage that reported the results, 31% beat expectation, which is not bad. 43% were within, and only 26% came in below par. Sector-wise, the positive surprises came from sectors like automotive, media, healthcare, plantation, and banking sectors. On the other hand, building materials and gaming missed expectations. Now, we don't really have a forecast for the FBM Hijrah Sharia index, but as far as the KLCI is concerned, if you use that as a bellwether for the entire Malaysian stock market, our Kenanga research team is now forecasting that the market, the KLCI universe, is expected to grow by 0.3% for this calendar year and 12.2% for 2023. Why 0.3%? The percentage number is actually being dragged down by the prosperity tax that was announced by the government during budget 2022 back in October last year. And on that basis, our current FBM KCI year-end target stands at 1670. That implies a PE of about 15 times. So just to put things together in the case of the investment landscape in Malaysia, what can we expect? we have from the very first slide showed that the Malaysian economy is firmly on a recovery trajectory. In the most recent slide, we have shown that the corporate earnings are on the mend. Earlier on also, we have shown that the foreign funds are returning as net buyers after a long absence. Earlier on in the first few slides, we talked about why Malaysia inflation rate, if you recall, our economic team is projecting the Malaysian CPI to come in at 2.4% for this year. Okay, and that's basically because the inflationary pressures are more manageable in Malaysia. And the reason is that we have subsidies and price control mechanism in the country. We also talked about interest rate hikes. In this case, OPR by Bank Negara likely to be in the second half of this year. And as recent as this week, we heard from the government that the country is ready to transition to the endemic phase from 1st April this year. So that's actually good news in terms of bumping up the economic activities again in the country, as our approach is to live with the virus. But somewhere down the road as well, there is a potential wild card in the sense that we may have faced another general election, and there will be a political question mark hanging over in terms of the outcome. And last but not least, despite seeing what has happened in the stock market this week, the first 2 days we were down sharply, and the last 2 days we actually rebounded. I think the market volatility will be here to stay, at least in the near term. On the other side of the coin, again, what we have shown in this slide is our base case, but what could potentially throw this base case off would be some of these factors that are mentioned in this slide. I guess the elephant in the room as of now would be the inflation rates. What market would be fearing most would be the inflationary pressures are not transition in nature. It's going to be elevated, and on the back of the runaway commodity prices, as well as continued supply chain disruption, the greatest concern at the moment is stagflation. Stagflation basically means that the economy is going to be stagnant with high inflations in the background. Second factor would be interest rate hikes. Even though market is pricing interest rate hikes, in the case of Malaysia, we are talking about 50 basis points towards the second half of this year. In the case of US, we are talking about 5 to 7 rounds of 0.25% hike. And if there are any deviations on the upside, meaning faster and larger interest rate hikes, that will basically cause fund diversions, especially from the emerging markets. And that would be bad news for the stock market. The third risk factor to watch out for would be the COVID-19 resurgence threat, which is an obvious concern. And again, we talked about the Ukraine war a little while ago. So it also depends. I mean, all bets will be off in the event that we see a prolonged and spreading geopolitical conflicts. At the moment, it's still very much contained within Ukraine. But if things get out of control, I think the economic equation will be thrown haywire. Last but not least, again, back to the earlier slide, the GE15 economic outcome uncertainties may actually prompt some investors to be more cautious. Okay, give me a minute. In terms of our investment teams, we have identified 3. we think at this juncture of the market, investors ought to look out for beaten down stocks, but with sound fundamentals still intact. And I think the obvious sector to highlight here would be the technology sector. The second investment theme would be, we talked about earlier on, the living with the virus approach, the reopening of the borders and all that. And there will be names that will actually stand to benefit on the back of resumption of economic activities, not just in Malaysia, but we expect more countries in this region to adopt this approach of living with the virus. And the third theme would be, I mean, some of the names that actually offer value play. The values have actually started to emerge. These are actually laggard stock names that we think could potentially play catch up as the market recovers. We have actually identified 5 Sharia stock picks for this report. And the first one, just to leverage on what we have just said in the previous slide, beaten down stocks with sound fundamentals. We think that Inari stands out. Our fundamental call is an outperform. Target price is 460. Inari, well, is a well-known name where it's actually a service provider, and it is more well-known for its radio frequency sensors, which they count among their clients big names like Apple. And on the back of the thematic play of 5G rollout, not just in Malaysia, but everywhere else in the world, we think that Inari is a firm beneficiary of this 5G adoption in end devices. Fundamentally speaking, in the December quarter, which is their second quarter, they have actually reported a very robust earnings momentum. It was a record high quarterly net profit of 108 million. Not just the P&L looks very interesting, even their balance sheet looks attractive. They are currently sitting on a net cash position of 1.95, almost 2 billion ringgit. That translates to 53 cents per share as of end of December this year. And our target price of 460 is based on a PE of about 40 times. 40 times represents 2 standard deviation above the mean. And despite that, we think that this is justified because of the 5G theme. Just a very quick tick on the technical view of Inari. This chart was plotted as of the closing price on Tuesday. Before that, you can actually see the share price has actually fallen from a high of 430 not too long ago, November last year, to 264 on Tuesday. What was interesting is that at about 264, if you can see the horizontal blue line, that represents a Fibonacci retracement level of 50%. And it was interesting enough to see that after testing this Fibonacci retracement support, the share price actually bounced up. And today, over the last 2 days, it has recovered and closed at 2.91 ringgit today. That rebound essentially is also can be seen because of the 2 indicators, the MACD, the MACD and the RSI indicators are in oversold positions. Next stock on our buy list is KGB, another technology name. Okay, this is essentially, it has 2 main businesses. One is in industrial gases business, and the other, what is the UHP, which stands for ultra high purity gas delivery solutions. Sounds a bit technical, but I think what is unique about this stock is that unlike most of the semiconductor or technology names in Malaysia, it is one of the very few that offers exposure to the front end of the semiconductor supply chain. Basically, what this means is that they are actually involved, their services are needed for semiconductor names when they want to build capacity because of their specialty in delivering the UHP gas solutions. Earnings-wise, recently they have reported a record high net profit of about 32 million, and forward earnings visibility, we can actually see that is pretty strong, to be underpinned by an outstanding order book of about 1.1 billion. 1.1 billion, that basically translates to 2 times the financial year 21's revenue. We have a target price of 190, and that's based on 27 times PE on FY22 earnings. Chart-wise, we can see that the share price has actually dropped from 186 as early January this year to 113 as of Tuesday. But we think that a share price bottom may be near. And as you can see, the share price as of the closing on Tuesday, it is about to approach the Fibonacci retracement level of 50%. We think that there is likely to find support at that level. And on top of that, if you are somebody who wants to use the Bollinger Band and the RSI as an indicator, both indicators are showing that this stock currently is in the midst of rebounding from an oversold position. Remember, our second investment team was about looking for potential beneficiary of reopening place. And we have seen this company, GHL System, which stands out as a potential beneficiary. GHL essentially is a payment processor. What is interesting is that they are involved, they offer exposure through their multiple payment services, be it physical, e-commerce, or QR payments, and they have a geographical reach in ASEAN, in countries like Philippines, Thailand, Indonesia, as well as Australia. As mentioned earlier on, we think that this is a regional reopening play with a footprint across ASEAN markets, where whenever the consumers or the tourists start to use their credit or debit card or their e-wallets to buy things and all that, they are expected to benefit because of their exposure in taking a cut from all these transactions. We have a target price of 190. That's based on a PE of 45 times, which on the surface sounds a bit expensive, but on its own historical band, 45 times only represent 0.5 standard deviation above the 5-year mean. How does the chart look like? For this stock, as of last Tuesday, it doesn't seem that it appears that the share price remains in a downtrend. At this moment, there is no signs that there's going to be a reversal. Okay, but nonetheless, where the share price is today, it has gone back to the October 2020 level. And if you look at the blue line, that's where we think that the stock is expected to find a Fibonacci retracement support, which stands at about 126 cents. The share price closed at 139 cents today. Dialog is the fourth stock pick on our Sharia list, and I think this stock doesn't need much introduction. It's one of the better well-known names in the oil and gas space. It is actually involved in the upstream, midstream, as well as downstream of the oil and gas space. Now, when we talk about the oil and gas sector in Malaysia, on the back of the rising crude oil price, right, the most direct and most immediate beneficiaries would be the upstream players, player like Hibiscus. Okay, whereas most of the other names, because of the nature of their business, they are very much in the support services segment. They will only benefit when oil majors like Petronas start to dish out more contracts to increase their activity. So far, we are not seeing that yet. But in the case of Dialog, it is actually an integrated player. It also has a bit of upstream exposure via their oil field business operation. Our target price of 330 is based off a sum of past valuation methodology. Chart-wise, the stock has actually retraced from a high of 396 to as low as 229 in October last year. But since then, as you can see on the chart, it has actually bounced up. From a risk versus return perspective, we think that the stock looks very favorable at this moment. Our last stock, this ties in with our third investment team, which is a laggard play, would be Pestec. This is essentially a power technology company. Essentially, they offer solution for any electrical systems that involve the high voltage. And they are also well known for their rail electrification projects. Why we like this company is that we see this as a niche utility infra play, where they also have geographical reach across the ASEAN market. And I think the market has so far underestimated this company. The company actually announced that they won a KLIA Aerotrain contract back in December last year. The contract value was about 743 million. Very little share price reaction back then, probably because of the poor market sentiment since then. But we continue to like this stock. We have a fundamental target price of 1.11 ringgit. That's based on 14 times PE. And also, Kenanga Research is so far is the only house in the market that covers this stock. Chart-wise, well, obviously this is a beaten down stock. It's a laggard stock. It has fallen from a high of 1 ringgit just November last year to as low as 58 cents on Tuesday. But we think that there is a potential technical rebound coming. And on the back of that, it will offer a very attractive risk versus return investment trade-off. Okay, so just to conclude, 5 stock picks that we have on the Sharia list. Okay, number 1 would be Inari. Number 2, KGB. Both are tech stocks, which we think the sector as a whole has been unfairly punished. GA Health System is a proxy to the economic reopening play. Dialog as well as Pestec are considered laggard plays where values have started to emerge. Okay, I will stop here to take questions.
Okay, thank you so much, Ying Fu, for sharing with us how do we hunt for gems among all the Sharia stocks on Bursa Malaysia. So if you have any questions for our speaker today, please write your question in the Q&A box, not the chat box, yeah, so that we won't overlook it and we can manage the questions effectively. All right, so write in the Q&A box. So Ying Fu, just now you were talking about the American is gonna tighten their monetary policies. So
Right.
So you feel that the carry trade will happen where the funds will flow back to America from emerging markets. So could you elaborate why you think that the ringgit will appreciate against the US dollar when your house expect that it will be about 4.1 at the year end?
Right. I guess it's a timing effect, right? The Fed will start to increase the Fed rate as early as next week. Whereas if you recall earlier on, we also mentioned that the Bank Negara is only expected to increase the OPR in the second half of this year. So we probably see a bit of weakness first before recovering. And in addition to that, I think what is helping the ringgit along the way would be the elevated crude oil price as well as the CPO price.
All right. So these are possible two factors that will strengthen our ringgit. Okay, so since we talk about the high crude oil price, where your house expect that it will be average about $90 per barrel. So the next question by Wong is that what is the risk of a global economic recession due to this high crude oil price?
Obviously, the risk is there. I think the key word is how long is this going to be? If it continues to stay at 120, 130 for the rest of the year, for argument's sake, I think most of the economic forecasts would have to be revised downwards. So far, I think if you look at the talk out there, almost everyone is expecting eventually the crude oil price to actually fall. It won't be sustained at this level.
Okay, thank you so much for explanation. Juki would like to ask, with the impending interest rate hikes in America, is it safe to buy technology stocks?
I guess it's a question of valuation, right? Obviously, I think the question arises from the fact that technology stocks started to fall at the beginning of this year, or even as early as end of last year, right? Because of the fear of interest rate hikes. Okay, but at the end of the day, I think it is more sentiment at this moment. But as I mentioned earlier on in one of the earlier slides, for share prices to continue to go up, what is important is delivery of earnings. As long as a company continues to deliver sustainable earnings growth, the share price will actually follow in tandem.
Okay, I understand. Okay, just now one of your stock picks for the Sharia stocks is KGB, right?
Right.
And then we noticed that in the year 2023, it is expected that the profit will drop. Is there a reason why your house expect that in 2023 the profit will drop?
Right. I think the nature of the business is such that I mean, we cannot see so far out at this moment, but obviously as time progresses, the company will be going out to win new contracts. And when they win new contracts, when there is a better visibility, the numbers will actually be reflected in the new contracts to be won. It's a bit like construction companies where you have your order book. It all depends on how aggressive or how conservative you are. So with the order book at hand at this point in time, obviously the bulk of the order book will be recognized in the coming financial year. But in the following year, it all depends on how much new contracts will be winning in the coming year. So again, it is basically due to the timing effect.
I see. Ken would like to ask, will KGB and Pestec be affected by the Russia-Ukraine conflict and also logistical issues?
Right. I guess not directly. Okay. As far as I recall, I don't think they have direct exposure to the particular region. But in the event that things prolong and things prolong for quite some time, they may actually feel the indirect impact. Things like if there is if the war continues, if oil prices continue to remain elevated, if the global economy goes down to a recession, at the end of the day, in that kind of scenario, everybody will be affected.
Okay. The next question by Anthony is, what is the impact from the rising costs on Pestec Aero Train project?
I don't really have the details because it is covered by my colleague. But my guess is that because they just won the contract in December last year, so meaning they would have very good visibility in terms of what's happening at this moment, what are the costs of their raw materials and all that. So chances are they would have already factored all that in their projection.
Okay, understand. YH Lau would like to ask, it is very hard to believe that inflation in Malaysia is only 2.5% when the cost of necessities have gone up so much, even with the price control. Would you please comment on this?
I'm not sure whether I'm the right person to answer that, because I'm not an economist. But I guess it's a matter of interpretation. I mean, as far as the CPI is concerned, I mean, CPI is known to be the indicator to be used to measure inflation. In the case of Malaysia, it's as good as we get. I mean, the CPI is being measured based on a basket of goods and services. And if certain goods and services are being subject to price controls and subsidies, then that's the number that we will get at the end of the day.
Okay. Ya Yun would like to ask, what are the indicators that a company would be excluded from the Sharia compliant list?
There are actually a list. I think if you, I try not to get too technical here. I mean, if you really want to be very specific, you can actually go to the SC Security Commission website, where they have actually mapped out exactly what are the criteria. But generally speaking, it comes in two forms. One is the business nature, right? For example, gaming stocks are definitely out of the Sharia list. Some of the tourism name, like Malaysian Airport, because of the composition of their earnings mix, they are also excluded. Banks are also excluded because of the way they charge interest rates, and so on and so forth. Of course, also it also depends on the financial statements. For example, the balance sheet, right? Most companies actually take on borrowings to expand their business. So it depends what is the percentage of their borrowings that come from conventional debt versus Islamic debt.
All right, so you can check it out from the Sharia screening methodology from the Sharia Advisory Council from the Securities Commission. Okay. The next question is, do you know, or are you aware of any steps that our government is taking to address our foreign worker issue?
Foreign workers issue, at this moment, based on what I gather, is very much industry specific, right? I think at the government level, if I hear them correctly, they are looking to protect the foreign workers more in terms of their rights, as well as in terms of the recruitment process, starting from the recruitment of the Indonesian workers, whereby there is an MOU expected to be signed sometime this month. And also, I think at the individual companies level, they are also engaging the independent consultants to come up with a proper policy, proper SOP in terms of how to deal with the foreign workers.
All right, thank you so much, Ying Fu, for addressing this question. KH Ling would like to ask, the cyclical market downturn or crash every 10 years has yet to happen. Is it still expected to happen?
In reality, things are not so straightforward. I mean, if it's going to be exactly 10 years, if everybody believes that, then everybody will sell in year 9 and buy back in year 11. So it's not so straightforward. And the numbers actually also run. I mean, if you try to backtrack back in, well, 1997, 1998, 10 years later, we had the global financial crisis, 2007, 2008. Okay, but in 2018, we missed that. It only happened in 2020, which was 12 years after 2008.
Okay. Now we know that Ukraine and Russia are involved in the supply chain of semiconductor, and I think they supply and process these inert gases. So could you give us your view on how does this current crisis impact the semiconductor sector? This is questions from Muhammad Sufyan.
Again, I think it's a question of how prolonged this is going to be. If it's going to be over within 2 to 3 months, I think the economy can still take it. Otherwise, the supply chain disruption, if it's going to prolong, like it or not, at the end of the day, the sector will be affected. And I guess a very good example would be nickel, right? I think Russia is a big producer of nickel. And I think this metal is actually being used to produce EV batteries. So if there is a shortage of nickel, if they cannot produce the EV batteries, it also means you can't produce EV vehicles. And if that continues, obviously the technology companies that supply to the EV cars makers will be affected accordingly.
Okay, so besides this EV, what other subsector in technology will be vulnerable to this supply chain disruption? Is it OSAT, ATE, or the foundry?
I mean, if you link it back to the EV vehicle industry, sub-industry, they will be affected. I mean, even companies like I think Inari, they do power modules for electric cars as well.
All right. Wing Hua would like to ask, you mentioned that this year investors should focus on value picks at the beginning, but your top picks such as Inari is projected at 40 times PE and other tech stocks. Would you please further elaborate on this?
I think it's a mixture. If you look at the 3 investment themes that we have identified, the value picks would be in the case of the 3rd investment theme, the laggard plays. And in this space, I think we have mentioned that Pestec would be one of the stocks that fit into this investment theme.
All right, thanks, Ying-Fu. Vincent would like to ask, how is the automotive sector outlook after June 2022?
Well, for the whole year, for the entire year of this year, our house is expecting the car industry in Malaysia to sell something like 600,000 vehicles, if I'm not mistaken, right? Which I think is a growth compared to 2021, right? So within that space, I think we do like some names. I mean, names like MBM, even SIME, I think we have an outperform on them. So certainly, I think for the whole year, I mean, against our base case of the economic growth, we think that there will still be demand for car sales. Of course, yeah, I mean, that also depends on whether some of the risk factors that we mentioned will actually derail the economic recovery momentum.
Okay, but after June this year, it looks like the SST exemptions will not be extended. So what is your forecast for the car sales here?
We don't really forecast on a half year to half year basis, but for the entire year, we are looking at 600,000. I mean, there may be an initial lull after that, but we can't possibly continue to leverage on this SST exemption forever, right? So at one point in time, we have to win it off. And just like what happened in the property market, right? The home ownership campaign has also ended. So the property developers will have to adjust and adapt to the new industry dynamics to drive growth. I mean, we continue to see home sales so far this year.
Okay, understand. Marcus would like to ask, is Bursa Malaysia among the top 10 in terms of Sharia compliant companies listed in the world?
Not too sure about that. Perhaps is there anybody from the Islamic side who can help me out?
I think no representative here.
Sorry,
right.
I mean,
no problem. Yeah. Okay, now what is your view on this stock of Takaful? Any potential upside? This question is from Lau.
Takaful, if you can just give me a minute, let me look at the list.
Okay. So we have, in the meantime, we have also given you the next CanTrade webinar link. If you want to enroll for next CanTrade webinar, you may click on the link here. If you want to open a CanTrade trading account, please go to the link given you in the chat group while we wait for Yingfu to extract some data.
We have a outperform call on Takaful with a target price of 5 ringgit and 35 cents.
All right, so you heard that, yeah? 5 ringgit 35 cents.
That's right.
So you were bullish on this counter?
Yes.
All right. So we have a Bursa rep who helped address this question. So yes, Bursa Malaysia is the leader in the Sharia equity market. So that is the answer from Bursa Malaysia rep. Okay, so let me just address the question. Okay, thank you so much, Bursa, for helping us with this. All right, the next question is by Mubarak. Since Bank Islam is the only Sharia compliant banking stock on Bursa Malaysia, what is your view on its potential price?
We also have outperform call with a target price of 2 ringgit and 75 cents. Bank Islam.
Outperformer.
Yeah, that's right.
All right. Do you think now is a good time to, accumulate some banking stocks in our portfolio?
Well, given the fact that this is based on a Sharia theme, right? May not be so good to actually go into too details on the banking sector, right? But generally, we generally speaking, our research team has an overweight call on the banking sector with some banking picks as well.
All right. Muhammad Sufyan would like to ask, what is your view on renewable energy sector in 2022? Is it still a growing sector?
I guess the initial excitement has somewhat faded after the award of some of the LSS projects. Okay. In the long run, I think the sector will be here to stay. I mean, the talk about climate change and all that, right? But in the immediate term, what we gather is that some of the companies are facing challenges in the sense that to actually put up the projects, the raw material costs, the rise of the solar panels and all that have actually gone up. And because of that, they may not be making as much money as they would like to per their initial expectations.
Okay, thank you so much, Yingfu. The next question is by Sukri. Now notice that GHL and Pestec are not a dividend paying stocks. So potentially, when do you think that they will start to pay out dividend?
I guess you can't have everything in the sense that when the company is in a growth stage, right? They basically need the money to grow the business, and because of that, they are not likely to use most of their profits to pay out dividends. If you really want dividend yielding stocks, I guess as investors, the beauty of it is that if a company doesn't pay dividend, you can always look for dividend yielding stocks.
All right.
I mean, there are names like MBM or Astro that are actually offering pretty decent dividends.
All right. Thank you so much, Ying Fu, for doing this very robust and engaging Q&A session with us. So let's wrap up this session. Okay, by me sharing my screen here. Okay, let me tell you more about our next CanTrade webinar. So the next CanTrade webinar is happening on 21st of April 2022 from 8:30 to 9:45. We will be talking about trend following stocks in an uncertain market. Will trend following strategies still work in an uncertain market? So join us in our next CanTrade webinar to find out more what are the strategies we can use, how we can adapt to this market using trend following strategies. So I've given you the links to register for our next CanTrade webinar. So for those of you who are who haven't had a Kenanga share trading account and you want to sign up for one, please fill up the form here, the online form, www.cantrade.com.my/open-account-form. So you just head over to this online form, fill in your interest, then Kenanga will arrange a friendly dealer representative to cater to your needs to open a stock trading account with Kenanga Investment Bank. All right, so thank you everybody for tuning in today's session. We have Mr. Goh Ying Fu, senior analyst from Kenanga Investment Bank, to share with us about hunting for gems among Sharia compliant stocks on Bursa Malaysia. Hope that you walk away with enormous value tonight. So hope to see you all again in our next CanTrade webinar. So thank you everybody. Have a pleasant rest of the day. Thanks, Ying Fu.
Thanks for joining everyone, and let's remain hopeful that better days are ahead for the stock market. On that note, happy investing and good night, everybody.
Yeah, good night, everybody. So this webinar is brought to you by Kenanga Investment Bank in collaboration with Bursa Malaysia. So bye, everybody. Have a great rest of the day.